G'day folks, Jim here from FX Charts. Was it Wednesday the 5th of January? Thanks for tuning in. The market was really all about the RBA and the Aussie today. The RBA removed its easing bias, as I'm sure you know. Sent the Aussie soaring higher, took the Kiwi with it, and it looks as though the market's been caught pretty short, and there could be some further legs to the upside. Elsewhere, the market was relatively steady. I think partially after the RBA announcement, risk-on sentiment came back into the market a little bit. So the yen's a bit softer today, as is the Swiss franc, and the US stock markets have rallied somewhat. So we'll go and have a look at the charts. Now, as far as the euro is concerned, that's really had a pretty steady session. It stayed above 134.90, hasn't been able to get above 135 or 135.35, I should say. And I think it probably sits around there for the next session, really, possibly until the ECB announcement Thursday Europe time. As we can see from the 1 hour charts here, it's really done very little. The charts are flat. The 4 hour charts look as though they're still trying to squeeze a little bit higher, but I think if we saw it up towards 135.75, 136 area today, we'd probably look to be selling it, and equally much below 134.80 probably be a buy. Further out, I still think we're probably headed lower for a test of 134.5 and then maybe lower to sort of 134. But for the meantime, the euro's are really sitting on the sidelines. Dollar yen, well, that had a choppy session, got down to 103 again, so we now got a bit of a double bottom down there, and it's recovered, and it's sitting against the first resistance here. This is quite strong up here, this 101.70. On the daily charts, that was the support on the way, the support for the uptrend now becomes resistance. So I'd be surprised to see us make much of a move above there today. There's not an awful lot out data-wise for the time being, and the market's really looking forward to the non-farm payrolls on Friday. So until then, I think possibly some choppy 101, 102 trade, and there are some good option expiries, I'm told, today at both 101 and 102. So we may just see it chop around in between there, and I'm not really expecting a great deal. Having said that, the 4 hour charts do have some minor bullish divergence. So if anything, we may get a bit of a squeeze to the top side, and if the Aussie goes higher and the stock markets look as though they're on the improve, then we may see a bit of a squeeze to the top side, but I'm not expecting too much today. Sterling, well, that headed lower into early Europe and then improved after some better construction data, and since then it's just mucked around really. It's back above 163, that got up to 163.40, and the hourly charts are continuing to unwind after the steep sell-off. The 4 hourly charts as well, they look as though they're a bit oversold, and they could squeeze a little bit higher. But I don't really think we're going much above 163 3/4 today, possibly sort of 164 or so. The 38.2 and the 100 hour moving average are sitting here at about 164.10-15. So I don't think we're going to see it that high. We might get a bit of a squeeze, but ultimately the market's waiting for the Bank of England meeting tomorrow, I think. Dollar Swiss likewise, that's stuck between 90, the figure, and 90.80. It got up to 90.60 today and was unable to improve on that, and it's back at sort of 90.40. The charts are pretty flat in the short term, not really showing an awful lot. So I think it's probably best to left alone and wait for the ECB tomorrow. The Aussie, well, that's where the main interest lies, of course. We've come up sharply from the lows, and the 4 hour momentum indicators are pointing higher. As we go further out, though, we're heading into some decent resistance up here. This is the daily chart. Now, if I add in the Ichimoku, let's just have a look at that. You can see we've come right up, and we've moved up, and we're right on the bottom of the daily cloud here. So I'm not really expecting too much more movement to the top side today. But having said that, the momentum is high. We've got this bearish. We've had lower lows, but we've got high lows on the indicators. So I think the momentum is slightly to the top side. The market is still caught short. Now, if we go out and have a look at the monthly charts here, you can see that the blue line that's the 100-month moving average. Now we're sitting pretty close to that at the moment. It's 89.67, I think it is. So we're sitting pretty much up against that. So what with that and the daily cloud, I'm not sure how much room to the top side there is today. Having said that, if we can break above here, then we're heading back towards 90 cents, which let's have a look. That's around this high here, yeah, just around this high here and these lows here. So that's going to be a bit of a pivot. 90 is obviously going to be quite important. And if we do break above that, then we're heading back to the 38.2% fever, the whole move down from 97.5, and that's at around 90 3/4. I do think that's some way off, but as I say, the dailies they're slightly positive. I think we might have seen a medium-term low down here now. I don't discount the fact that later in the year we're probably headed to 85 cents. And there's plenty of analysts still calling for a rate cut July, August, somewhere around there. So yes, the pressure could be down further later out in the year. But I think for now we may see another test of 90, which may turn out to be quite a good selling area. The Kiwi, well, the Kiwis have just released their unemployment rate, which came in at 6%, although the unemployment change was better than expected at 1.1%. Expected only to be plus 0.6. So that's seen the Aussie spike up to a high of where 82.56. It's back down at 82.37 at the moment. Short term, this is just a very short term chart. But if we go further out, you can see we are taking out these highs, and the momentum is still pointing north. We're sitting on the 50% pivot of the whole move down. Now, for today, the indicators actually remain quite positive, and we could yet see a squeeze high, particularly if the Aussie goes north. Although, as I've just said, I'm a little bit dubious as whether we can make too much headway on the day. But the dailies, they're looking somewhat undecided at the moment, and I'm not really sure. At the end of the day, we're back in this in the middle of this choppy consolidation, and we're running into some resistance up here. Where's that? At 82.70 is the 100-day moving average. So once again, I suspect that we're probably going to run into some topside headwinds there on the day, and don't really see too much. I think it'll probably just remain choppy, and we could just remain so really until the non-farm payrolls. Obviously, the ECB and Bank of England announcements will create some movement on the crosses, so there will be some interest. But I think now we've pretty much done the Kiwi data for the week. For the Aussie, we've got the retail sales and the trade data tomorrow, and the monetary policy statement on Friday as well. So it'll be, I think the Kiwi will be led around a bit by the Aussie, but in the meantime, I think just expect some choppy consolidation. So now that's about it really for today. As I say, we're waiting for the ECB and the Bank of England, and on Friday the non-farm payrolls. And really all up, I just expect it to be pretty choppy. Watch the emerging markets and how risk sentiment unfolds there. That changes like the wind, so you need to be a little bit careful. But that's about it for today. Keep stop losses tight, and we'll talk to you tomorrow. Cheers.